The conceptual framework, paragraph QC4, describes two fundamental qualitative characteristics and four enhancing qualitative characteristics. Laura is thinking about investing in Widget.com. The only information available is unaudited, summarized financials for the current year. These indicate that Widget.com achieved a very high profit margin and the company is solvent. Laura is very frustrated, since she intends to invest a significant amount of money and based on the limited financial information, she cannot predict how the company will perform in the future, and she is also unable to determine if the high profit margin is indeed a faithful representation. How has Widget.com failed in satisfying the fundamental qualitative characteristics of useful financial statements? Before we answer this, let's consider some theory. Relevance is the first fundamental characteristic, and this refers to the ability of users to make decisions based on information presented. There are two measures that can be used to determine relevance. Predictive value of the information is the first item. That is, the ability of users to use the current information to develop trends and forecast what future performance might be. Confirmatory value refers to the ability of users to confirm their own understanding and estimates with actual results. Materiality underpins relevance. Something would be considered material if it has the ability to influence users' decisions. The financial information deprived Laura the ability to develop trends since it only includes the current year. Therefore, the predictive value of Widget.com's financials are basically non-existent. The ability of Laura to get confirmatory value is also low, since the financials are unaudited and they are summarized, so do not afford her the opportunity to confirm or correct her understanding. Faithful representation is the second fundamental characteristic. This means that information that is presented in the financial statements needs to reflect what it is actually in reality. For example, the balance sheet may reflect computers with a value of $15,000. However, in reality, the computers may actually be obsolete and no longer in use. So the reality of the situation is that the computers should be impaired and reflect a zero balance in the financials. The summarized financial statements prevent her from judging each income and expense line item to determine if the high profit margin is indeed correct. For example, if Widget.com could have brought forward the incomes or deferred expenses to fraudulently inflate profits, Laura would not be able to confirm the faithful representation based on the limited information provided. To recap, relevance and faithful representation are the two fundamental qualitative characteristics of useful financial statements. And if these are not demonstrated, then it can be very difficult for users to make the right decisions.